We are going to turn to another company that seemed like, if not a one-trick pony, a company that did one thing very well and happened to do it well at a time when everyone needed it. I'm talking about Zoom. And here too, the question has been, okay, what next? Because do you grow to a certain point? You can't grow beyond that. So what do you do? Well, the company's answering that question, at least to some degree today, by making an acquisition. It's buying a company called Five9 for $14.7 billion. And this company is a cloud company, and in particular provides contact center software. So customer relationship management is effectively what it does. It allows people who work at call centers to work remotely. Soz, I'm going to start with you on this one because I know you have looked at Zoom in a lot of detail. Does this make sense? It's certainly not a transformative acquisition, right? But does it make sense as a sort of bolt-on acquisition for Zoom?
It does. And I can't say I'm surprised. We have asked Zoom repeatedly in recent quarters, how are you going to spend your cash? I mean, exiting the most recent quarter, they had close to $5 billion in cash. Now, important to note, this transaction is all in stock, an all-stock transaction. That's why I think you're seeing Zoom shares down here in the pre-market. That's what tends to happen in these all-stock transactions. But for Zoom, they are a company obsessed with getting into the enterprise, aka that is big corporations. They want those big accounts, and they have been making a lot of headway into those big corporations with their Zoom Phone. They love their Zoom Phone. They are dead set on taking market share away from Cisco's dominance in the office phone life. And over the past, I would say 2 or 3 quarters, they have become a market share gainer in Zoom Phone, and Five9 will help fill out that product offering. I will also note very quickly here, Myles, you're seeing pressure this morning on RingCentral, shares down about 5.5% pre-market here. It will be interesting to see if RingCentral has to respond to this transaction from a Zoom, because as it stands right now, once this deal in effect closes, Zoom will have a more, I would argue, a more complete product offering than a RingCentral. Hence, you're seeing the stock down here in the pre-market.
Yeah, I mean, I think, really it's just good to see Zoom do the thing we've kind of talked about them needing to do for some time, which was use their stock as currency in the way that the market was telling them we will allow. I mean, Zoom's market cap about $100 billion. So you're buying a company that's about 15% of your firm with all stock, and shares are down 2% on that news. Again, the market is telling you, like, keep going, keep doing it. Now you can only make so many acquisitions of that relative size in a given year. It takes time, so on and so forth. Certainly, I think some of what we're seeing in Zoom shares this morning are also related to kind of the broader market sell-off, right? I mean, Ring is under a little bit of pressure here, but if I pull up the stay-at-home trade, so is literally every other stock on this. On this screen, right? Because it's not shaping up as a great open here as we get this week's trading. But I think really it's going to be interesting to see how much more aggressive Zoom is going to be, if they are at all, in terms of doing more of these types of acquisitions and specifically using their stock to do them. Obviously, buying something from cash can be maybe a little bit of a stronger signal in terms of the view in your business, the view in the other business. Stock, people, sometimes they don't love that you go out and you dilute your stock and you use it strictly as currency, so on and so forth. But I think the market, again, for a stock that has a lot of questions around it, it's held in okay this year. It's underperforming the market, but it is flat-ish so far this year. And I think investors are saying, show us how you'll transform the business, and starting to get a glimpse of that today.
Yes, indeed we are. And as you said, it's down, but it's not down an enormous amount to reflect that people are upset about the acquisition to an undue degree.